No, I mean, I'm taking a look. It looks nice compared to what we were expecting. Obviously, we all know January can often be a shock from prices resetting just normally, and then there's obviously the seasonality factors. And taking that aside, we're not seeing a whole lot of one tariff pass through, which there was this concern that, after we'd sort of seen the dust settle, businesses would use January or the new year to basically reset higher. I'm looking at apparel, I'm looking at home furniture. Some of these things that we know would be in the crosshair there are not moving higher. Auto insurance is down. That's good. Obviously, shelter, big lower hit there, which is going to drag the whole thing down, which is very positive. And finally, I think it's coming from hospital services there. I see that is sticking out a little bit. And look, that is not cyclical.
Yep. If you're the Fed, I mean, pretty darn good week for you, right? I mean, if you're the administration, a good week. You feel like the things are working in the right way. But if you're the Fed with a dual mandate here, I'm in pretty good shape here.
Markets are pricing in a half a cut. So we're at 2.5 cuts for the year now on this.
2.5 cuts.
Yeah.
Okay, so what do you think? What are the variables going forward, do you think, for this?
Again, I think we have to watch these labor revisions, as we know.
Yep.
The worry is that, one, the actual labor for January was not very cyclical. It was also structural, again, with what we're seeing in the CPI. So there is a structural story about the aging demographics of this nation. And that itself is not something the Fed can really target, but it is going to be a drag on overall growth. So we need to get ahead of that as far as the conversation. They need to sort of identify how they're thinking about it.
Red and green in the screen, we were very negative. Then we had a real recovery to a pop of decent green. Now -3 on futures. Small caps give me a little bit of green love now, but the VIX comes in. It was almost a 22. Now 20.86. The bond market is where we see some action. We got to a 4.06 on the 10-year yield. Now 4.08. Backs up a little bit off of it. Critically, I'm eating my Greek yogurt muffin.
I know
from
you've
Lisa
been all
Mateo.
over that. Thank you, Lisa.
I mean, I'm on my third one. Leave me alone. The 10-year real yield, 1.77%, speaks volumes to me. What's your mystery right now? You're going to write. I mean, I know you don't work the weekend. Did you know we're off Monday?
Yeah.
I had no idea.
I know this because I have a kid who will be home.
You have a kid that'll be. I mean, I'm sorry. It's February 12th. It's Lincoln's birthday. 22nd is Washington's birthday. 16th is a non-holiday.
I don't know.
I'll be here. Michael, what are you going to write about this weekend?
Well, I'm going to think about how we have to still discuss this price level versus change in price. And I think that's been a big theme where, again, we're all very conscious of, and you guys were speaking to it earlier, you go out, you see it in your face. And again, here I'm looking at the CPI report, food away from home barely went up, 0.2 here. Energy, we all had bigger bills from the winter, barely went up here in this. So is there really a disconnect, again, from this data to what is being experienced by the consumer? And hence we have to be careful saying, all right, well, inflation's beaten. But the consumer itself is still feeling it. It's feeling it from the levels, and it's also seeing a little bit different of a basket than what we're officially getting.
Don't you take a 3-month moving average?
You can, and I think that's all what's going down. And the 6-month average is even more encouraging. And I think when you hear from Myrons of the world and these kind of Fed guys that are more dovish, that's what they're looking at, the trend.
You know, in the labor market, people are concerned that it's really just being focused on healthcare and it's not a broad growth. But Peter Cheer of Academy Securities came out with a good point saying the good news is, or maybe the silver lining is, it wasn't government payrolls growing. Those actually declined a little bit. Thank you, Doge. So any job gains are in the private market. So at least that's better than just adding on to the bloat of the federal government.
Right, and you guys were talking about Adam Posen earlier. He did a good one on Odd Lots, speaking to the effects of Doge being sort of unevenly hit by certain demographics. What I would also take comfort in, and this may just be the AI build-out, is that the construction worker numbers were positive. Although manufacturing itself was relatively flat at 5,000, construction had 30. That's like a good sign. I mean, we obviously know that's not coming from the residential pulse, and we obviously saw the housing data for January, which was weather affected, being negative. But overall, we're not seeing a rollover there. And with what's going on in the immigration story, we still want to see construction jobs being added.
Can you stay with us?
Yes.
I mean, did you see what they have Eggs Benedict today up in the food?
Is that right?
Yeah,
Solid.
I thought Michael was heading out. Michael Ball with us with Bloomberg News, and he'll stay with us. Can we talk to someone smarter than you?
Yes.
Veronica Clark, folks, home run, nailed the jobs report. Andrew Hollenhurst turned to Veronica Clark and said, UNC beat Duke. Veronica, what's Jobs Day going to be? She nailed it with 135,000 estimate. How did you get there, Veronica? How did you guys get to way away from consensus? How did you do that?
Yeah, I was just feeling really good after this weekend. Yeah, too. Yeah, it is. So I wouldn't read too much into that strength. The reason we were expecting that 135,000, obviously saw the number very close to that, is this really clear residual seasonal pattern that we see in a lot of data, and especially in the jobs data, especially in the inflation data too. That has meant stronger job growth in January. Usually what happens in January is you get this big decline in employment. When hiring is already low and firing is already low, that decline is less than usual, and the seasonal adjustment is too positive.
Right.
So I would take that stronger number with a bit of caution.
Okay, that's total nerd patrol. Combine the jobs report Wednesday, the CPI report Friday. What's it mean for Chairman Powell? What's it mean for Chairman Warsh?
Yeah, in all of this data this week, there's really nothing to change Chair Powell's view. I think that maybe there's some labor market stability. Again, I would be really cautious with this January data. I actually don't think there's a whole lot of labor market stability, but there's nothing really in any of this to change their view of rates on hold for now. But I do think this is, in terms of their dual mandate, a labor market that's moving in the wrong direction and inflation that's moving in the right direction. And I do think they'll be cutting later this year. Maybe we do get more of those cuts as we get to the summer with the new chair. And that's when the labor market data have weakened again in the last couple of years. We would expect that again this year.
Veronica, you put together the data we saw this week in terms of a pretty full employed economy, one now with modest inflation out there. This has got to bode well for the U.S. consumer. How do you view the consumer these days?
Yeah, we've just had this surprising resilience to consumption for a number of years now, despite the labor market that is still very gradually weakening. Right, we have had on average a couple tenths of an increase in the unemployment rate each year, but yeah, consumption has just been surprisingly resilient. We did have retail sales data earlier this week that was softer. It's always hard to seasonally adjust that around the holidays. Maybe as we get January data, we have some winter storm disruptions too. But I think the expectation is that if this is just a gradually weakening labor market,
Right.
Yeah, people will probably keep spending. But I would worry that more and more people are worried about their job prospects. We see that in the consumer confidence data. Maybe you do cut back on spending a bit more at some point.
Veronica Clark, Citigroup with us, and Michael Ball of Bloomberg News with his work in macroeconomics, his tour of duty at the Fed. We're going to continue with Veronica Clark and Michael Ball. We say good morning to all of you, commercial free to 9 o'clock with the support of Interactive Brokers. Bloomberg Surveillance is brought to you by IBKR. Will the year-over-year change in the U.S. CPI will exceed next month 2.6% in February? Turn your view into a trade at ibkr.com/forecast. Last trading day leaps out to March 11th, and we thank Interactive Brokers for their support. Michael Ball, David Rosenberg was iconic at Merrill Lynch in saying, okay, and I say this, folks, I go, beneath the headline data. Baloney. Guys like you and Veronica Clark, Michael Ball, are looking at 50, 60, 70 items. The headline here is firmer services costs from our market to cut. Is that what we saw?
Look, I think I'm having a little trouble sometimes now because you have to put everything again into overused term of the K economy. So when I see airfares here rising 6.5%, but we're hearing from the airlines that they have this bifurcated experience with upper income people spending, the clubs are doing well, the cards are doing well, but the lower economy class people are struggling and they
Right.
can't pass prices on. Like, what does this number really mean then? Because again, we have 20% seem to be doing just fine,
Right.
pushing the envelope, and then 80% who are more price sensitive and value orientated. And this is not really showing up again as cleanly because this data can't capture that as cleanly.
We turn to surveillance Caribbean correspondent Paul Sweeney here. How about Aruba? It was packed, right?
Aruba was packed. The flight down and back was packed. The restaurants were packed. It's one happy island. Everybody was happy
Alexis,
down there.
do we thank Paul for that report?
Oh, of course. You should always call in.
Absolutely.
Whenever on vacation,
He
anywhere
called
in the world.
He was at the gun turret looking at Venezuela. Was like
Venezuela,
10
right there,
miles away.
right there, exactly. And I'm just
Unbelievable.
glad my fishing boat wasn't bombed, so we had a safe fishing trip. Veronica, talk to us here about the 30% of the economy, which is manufacturing. It had been in contraction for such a long period of time. I know it just doesn't get the love that the consumer does because the consumer is so much bigger. What's going on in Middle America with our manufacturing economy?
Yeah, it's been an interesting story. I mean, we've obviously seen, payroll job losses in manufacturing for a while. We did see some stronger job growth in January, but again, would caution to read too much into it. But it does predate this year. So, there are maybe some headwinds from tariffs, but it started before tariffs. Manufacturing is going to be a more rate sensitive sector. If you were looking, for evidence that maybe restrictive rates are weighing on hiring, that could be evidence of that. Yeah.